Ladies and gentlemen, boys and gals, we are back, baby, back in action. We do start trading again coming tomorrow, and I think this week is going to be very exciting because of all of the data that we get released. We could have a very big bullish reaction or a very bad negative reaction. Now, I think for AMC, we're a little bit in a different boat here, for lack of a better word. Last time the stock market actually went down in a big way, AMC stock actually went up. As you guys can see from this chart, that sell-off that we had really from the beginning of June until midway through June, AMC did not play along at all. So it doesn't have to be a doomsday scenario. Even if we have a bad week for equity markets, it does not have to mean a bad week for AMC stock. We know we have millions of FTDs that will likely start being rebought in this upcoming week, and we do have a lot of option activity that could help lead to a gamma squeeze, and a pretty significant one at that. So that's something we're going to talk about, run through the data that you guys need to know, and then where AMC will likely be to close out the end of this week. So without any further ado, it is the 4th of July. Make sure you guys go out and enjoy yourselves. But in the meantime, as you are getting your financial education on, help push this video out to as many people as possible. Hit that like button and subscribe to the channel. Help to grow this community. In the end, I think it will benefit every single AMC shareholder out there by doing that. So let's get into this. If you guys want to start off Q3 in the trading community, link down below in the description of this video as well. Get your free stocks with Webull, Moomoo, and Public if you guys haven't not already. So first things first, we got to talk about the data because there's really one thing you guys need to know when it comes down to the markets right now, or really two things. The markets care about interest rates, inflation, and essentially a recession. But the thing the markets really care about right now is a recession. In a weird way, the longer a recession takes and the higher inflation gets could be a bad thing because it drags out this whole uncertainty period, right? When you get a recession, you usually get deflation, but then you get obviously declining earnings, declining growth at some companies. So that's where I think it could really be a stock picker's year, or even over the next 2 years if we do go into this recession. Like the Atlanta Fed GDP Now tracker is expecting a negative 2.1% print for Q2 GDP coming July 28th. That would mean that yes, we are in a recession. So any data that says, hey, we're in a recession and inflation is still high, or even possibly, God I forbid it, say going higher, then you're going to see a lot of fear in the markets. But it could be a lot of that good news is bad news is good news kind of situation. Now on Tuesday, you really don't have anything, but you do have factory orders month over month for May. That comes out at 10 in the morning on Tuesday, so tomorrow, and that will probably move the markets. It's not expected to be a high volatility catalyst, but anything that has to do with manufacturing data, the consumer credit, those are going to be important data points and events for the markets. Now on Wednesday is really when you start to kick things off in a bigger way. You have Fed Williams that speaks at 9 a.m., ISM non-manufacturing PMI for June at 10 a.m., and JOLTS job openings for May all coming at 10 a.m. A couple, other data points here and there, but those are expected to be the big ones. And then the holy grail of catalyst for this week is likely to be the FOMC minutes. This is, again, the transcript from the last Fed meeting, essentially how the Fed is getting to their decisions. Are they just listening to markets? Are they seeing something that possibly we are not? And do they give us any indication of what they are going to do at the next Fed meeting? Right now, the markets are firmly pricing in the Fed is going to raise by 75 basis points. That is in 3 weeks, 1 day, 23 hours, and 35 minutes away, July 27th at 2 p.m. And that's expected by about 93.3% of market participants. So we're widely expecting that interest rates to go up again in a big way. And depending if we go into recession the next day on July 28th, or in Wall Street terms go into a technical recession, I'm not sure if it'll actually be confirmed, or if they're going to want to see more consecutive quarters of declining GDP growth. But 2 declining quarters is technically a recession, and that's when Wall Street will freak out, in my personal opinion. So we're not quite there to that freak out period. So yes, I think it is possible just in that regard to get a little bit of a relief rally, and we could make our way up 5% to the upside or 5% back to the downside, and that would be the lows of 2022, at least for the S&P 500. So I do think end of July, that's going to be very important, but you know, I don't expect a huge rip to the upside before then, and I don't expect a huge drop to the downside, but still 5% to hit the lows, that would be a pretty decent move down from where we are currently at, and I think that's what we could be looking at for this upcoming week, or really the week after that as well. Just if we do start to get a lot of bad data that comes out. Now on Thursday, you do have ADP employment change for June. You also do have the balance of trade for May at 8:30 in the morning. You have exports, imports, initial jobless claims, continuing jobless claims. You do have some other key data that does come out as well earlier and later in the day. But a lot of that's going to be around 8 in the morning, 8:30 in the morning. That's when you're going to get the balance of trade. And that will be very important as well, because if this trade deficit continues to rise, then that is going to weigh on GDP, and that will essentially freak the markets out. They're going to say, hey, you know, our exports are really dropping. We're running a huge trade deficit, or bigger than we expected, and that's going to feed into GDP. So I think that will be important Thursday. And then on Friday, you have non-farm payrolls for June, unemployment rate for June, participation rate, average hourly earnings year over year and month over month. All of that will be important again. And then at 11 a.m., you do have Fed Williams on Friday. So you do have a lot of data that can move the markets in a big way. But the second thing markets really care about, beyond inflation, beyond, more importantly, as of over the last couple of weeks, a recession. On top of that, people are going to care about earnings, because it's one thing to go into a shallow or just a technical recession due to maybe the exports or the imports are not good, or just inventories are building up. That's one thing. But if you start to go into recession where consumers actually start to slow down in a big way, then it becomes a lot harder to estimate, say, how much revenue, how many, dollars of EPS is Apple going to do in 2022 or 2023. It becomes a lot harder to get clear estimates, and that's where you can get a lot of volatility, as people just don't know where to value these stocks. That's where a lot of opportunity comes in, but that's where you could potentially see a big flush out move to the downside, specifically when the margin debt has only went down about 12% for 2022, whereas the NASDAQ is still almost down about 30%. So I think you're really getting close to a whole margin call event, and I think that's something to watch in and of itself. Now, on the note of AMC and the theater industry, Minions: The Rise of Gru tops 108 million as parents flock back to cinemas, kids in tow. And it does say 68% of ticket holders were part of family groups, according to data from Intelligence. Now, I think this is pretty key, because, as kids are out of school, those kids' movies can actually bring theaters a lot more revenue than anything else. Even if the ticket sales were only 108 million, I mean, if you think about probably a family, if dad takes out, wife and 2 kids, you're at least spending like $20 on drinks, popcorn, food, whatever else it is, and that's where theaters make most of their money. And I think this could actually be a big benefit for AMC stock in the upcoming weeks. Kids movies don't always tend to do the greatest. Some do obviously very well, some don't, and this one looks like it is doing very, very well. Could be $1 billion movie when all things are said and done, which would be quite wild for a kids movie. Now, let's talk about AMC, the Ortex data, go over the option activity as well. And I think there's some interesting things on the Ortex data that you guys definitely should know, like the FTDs. If you guys have not seen the video, I put out about 4 million FTDs. You definitely want to go ahead and watch that video, because if we take all this other stuff off the chart so it's not as messy, take all of it off, you can see these FTDs are in the $2 to almost $5 million range, or share range, I should say. It's not in dollars, it's in shares. Last time we were this high was during the run up in June, and we actually hit the highest point of FTDs January 1st, 2021, and then you did see that final big rally in June. So it doesn't always have to mean we spike and then go through a major rally. It can be delayed a little bit because of T+35 settlement time, but eventually those are shares that will guaranteed need to be bought back on the open market. So keep that in mind. I think that is very important and something that should be very encouraging for a lot of people. At the same time, these shares out on loan are being reduced. You are seeing quite a bit of shares that are being returned, and I think this was just shares that were lent out that were not actually sold short yet, because as the short interest was 22 to 24% at the higher end range over the last couple of weeks, well, what you have actually seen with the shares out on loan and the free flow out on loan, that has been almost 40% for a long time now. So you almost had double the actual amount of shares that are lent out just sitting in people's accounts waiting to lend them out or waiting to return them. So I think Ortex is getting this information and they're estimating the short interest is actually going down. But if you have been in AMC for a while, if you've seen the short interest go up and down, you will know when shorts are covering. Specifically, you're talking about millions of shares here, right? The amount of shares that are currently sold short sits at about 24% or about 18.29%. But the actual shares that are sold short is like over 100 million. So if you've seen this come down, you've probably seen about 20 million shares theoretically covered, if you wanted to believe Ortex, and we're not seeing anything that would validate that actually happening with the share price of AMC. The free flow out on loan still sitting at 28.48%, 146.79 million shares that are still out on loan. Days to cover at 3.52. Cost to borrow says 16.68. That is up from 1 week ago. 100% share utilization. Cost to borrow max sitting at 41.45%, cost to borrow average at 15.71%, cost to borrow minimum at a negative 0.97%. Currently sitting with about 150,000 shares that are available to be sold short, and that would cost the borrower about 20.21% for the cost to borrow. So cost to borrow minimum is negative right now, but it's actually not negative. It's really around 20%. The option activity as far as Thursday and Friday did start to turn incredibly bullish as well. Thursday had a positive order value of about 75%, and Friday had a positive order value of about 91%. So I think that is also very encouraging. And if we look at the Stocko Tracker data, you can see July 15th, we have about 30,000 calls that are in the money, 458,000 calls that are out of the money. For this upcoming week, we only have 53,000 calls out the money, 8,500 calls that are currently in the money. But for July 15th, you have about 87,000 puts that are currently in the money. And I mean, even if half of these total calls or puts went into the money, or in this case the put case, puts going out of the money, then that would still be over 25 million shares that would have to be bought by the market makers, and that would be a very, very bullish event. That would be a gamma squeeze in and of itself. So I think it's possible we do get this gamma squeeze. If we break out above and stay above 13, we break out above 15, that's going to put us pretty close to the 100-day moving average, sitting at about $16 per share. And if you can break out of that, that's when you could really start to make a move back to the $20 or even the $24 level, where the 200-day moving average is. And why I said earlier in this video the technicals actually look very encouraging to me is because it's been a while since we were above the 50-day moving average, and that is just very bullish. Breaking out above 50, 100, 200-day moving averages across the market, doesn't matter what it is, S&P, NASDAQ, whatever it is, it's going to be very bullish. Now, the 100-day moving average on the S&P, we're not at that. The 50-day moving average, let's see. Actually, 50-day moving average is down here at 398.41. 100-day moving average on the S&P is at 418.13. We're sitting here down at 381. Right? So you're not even close to breaking out above the 50-day moving average, not even close to being in an uptrend, but AMC stock is in an uptrend, and we are holding support above the 50-day moving average. We're finding resistance along this descending level of resistance, the peak of pretty much the last rally back in the end of May. But if we can break out above this line, this descending level of resistance and hold support at the 50-day moving average. That breakout could be pretty explosive to the upside, could land us in between about $16 and $20 by the end of the week. That's pretty much where I would put my estimate. I do think it will be a bullish week regardless for AMC because of all the option activity over the next 2 weeks or so, and then also the FTDs. I think it's very possible that we're in between $16 and $20 per share to close out this week. So that is pretty much going to be all for this video. The RSI is at 52.88, so that is pretty close to that neutral level of 50, but still a little bit on the bullish side. The MACD is very bullish, very bullish overall, but it's not really saying, hey, imminent rally or imminent crash. It's just been pretty neutrally bullish for a while. You guys can see when you're really bullish, you see a big divergence. What we're seeing right now is good, but it's still not super bullish. So there you have that. That's pretty much it. Thank you guys for tuning in. Hit that like button and subscribe to the channel. Greatly appreciate you guys for doing that and helping to push this video out to as many people as possible. You guys enjoy the rest of your day, and I will see you in the next one.